All right. Yeah. So we got Intel's report just came out.
Yeah, AMD is going up. Most sem,
AMD is going up
yeah,
too. That's
most
interesting.
semis must be going up, I guess. So,
Mhm.
um,
No, I mean, good, looked like a good report. Revenue, 13.65 billion versus 13.14 estimate. The EPS, for whatever reason, is not comparable, but it came in sorry, just 23 cents. Um, I'm just trying to see if there's any for the third quarter. Net income of 4.1 billion.
mhm.
Okay. Where's there it is. The company said that its products group reported 12 or excuse me, the products group reported 12.7 billion in sales. That's up 3%.
I mean,
Of that, go ahead.
no, no. I mean,
Yeah.
revenue revenue is up 3% year over year, bro. And I mean, so I guess that this is a step in the right direction, but I mean,
Yeah, 67% of it was for the PC business. So not data center. But
correct.
but the other remaining, the 34% of it, 4.1 billion, not nothing, was for data center CPUs, not GPUs, but CPUs. This is
I
an
mean, it
interesting
was a decent report, I guess, but
report. I mean, the company's
this company still has a lot to do. So I don't know.
well, we now know that the United States is its biggest shareholder. If you ask me, that's a good thing, so long as this administration and like-minded administrations follow it. But in 2028, let's just say you get somebody else in there that has a very different view on everything that's happened in the past 2 years, and maybe they start not like reducing their equity positions because I imagine these positions will be higher. But what if they're not as accommodative to the idea of holding it or aggressively doing X, Y, or Z? Because it's a big deal. If the United States government is your biggest shareholder, your stock will move if there is a belief that the next executive in office could sell the position or do something different. I don't know. It's a weird
I
place to
think the
be.
stock started to go up. The second Nvidia
Mhm.
announced a $5 billion an
Yeah.
Intel. So
Hold on. Actually, that's a good point. Let me show you this.
yep.
So I upgraded my laptop the other day to Republic of Gamers. It's like it has a Intel Core 9 and an Nvidia 5070 Ti. I got it on sale, but the fact that it is a NVIDIA Intel crossover and not an AMD or an ARM NVIDIA crossover is important for the PC market because for a company like Intel that isn't, hundreds of billions of dollars in market cap, stealing some PC market back from AMD is a big deal.
Yeah, it's good news, I guess. But I don't see any fundamental reason for the stock to be going up based on this report. It is a very, I mean, it was I guess, that a decent report. And behind all of this, we have Nvidia supposedly investing $5 billion in Intel.
Yep.
And I don't know. So what's the bull case? That the U.S. government is going to be pumping the stock? But I mean,
I
I'm,
think the
I'm
way you can look at it
I don't like
is
any
like,
government.
oh, I,
You know,
I, I don't like it either.
I don't
Kind of
like
what I
any
was alluding to
government.
earlier.
Taking stake in a private company. It is
Let's
just
just
what it is, I
say,
guess. But I am super against it. Super against it.
no, regardless of what we think of it,
So if you tell
I
me
think
that the U.S.
having
government is going to be pumping up the stock, I mean, yeah, maybe that's good news, I guess, in the short term. So yeah,
Well, I,
I
I
guess.
think if you look at it, you can think of it as a way of, in a world where we have an executive that is at the first sign of any disrespect or maybe even just boredom, it's like, all right, tariffs on Truth Social, let's shake the snow globe. You know that Intel is going to be protected, and any deal that the Trump administration over the next 2.5 years or whatever left is remaining until November 2028 might go in the favor of Intel the way they're going in the favor of Boeing. I don't agree with it either, but it's a short-term thing. I think if you're a long-term
What what
investor of Alec,
what
go ahead.
what happens if there's an important executive decision that Intel has to make, and during a shareholders meeting, the government says no.
Right.
So
No, I mean, listen, I don't like it either.
how can the government make a good decision on any company?
Oh,
Because
I'm right with
maybe
you. I
the
don't think
company can say like, okay, this is what we should be doing. But if the government
Mhm.
votes against it, you cannot go against the government. So this is super negative, from any perspective. But if we say that the U.S. government until 2028 is going to be pumping up the stock, I mean, yeah, I guess
Yeah.
that's good news. I mean, you know.
No, that's what I'm trying to get to the point of. If you're a long-term allocator of capital, this is not something you want to deal with. It's just going to be a headache. It's a lot of question marks that you just don't need to deal with
Correct.
in other companies. But if you're trading and your time horizon is, you know, weeks or even just days and not years, then I think you could be like, well, let's just see how much more money we can throw into this pile fire because it's a smaller company and supply and demand. There, all of a sudden, you have huge buyers of Intel stock that never would have been Intel stock, would have never bought Intel stock before. You, like you said, 10 billion from the U.S. government, 5 billion from Nvidia. It's only a matter of time before other people and other companies try to get in on that wave. It's supply and demand. Eventually, the incremental buyer runs out, but until then,
And
trade it. I'm not in it.
we can make a case that Jensen is supposedly going to invest in this company on command. It's not a decision that he made because he believes that Intel has any future ahead of itself. But it is what it is. The stock is going up $41 after hours. Let me take a look at the technical chart, by the way. This is a
Go
good
ahead.
one.
To
And
be fair though, when this came out, you said it made the stock sexy again. So I thought you'd be happy to see this response.
yeah, so again, since Nvidia is supposedly going to be investing $5 billion in Intel, I mean, this is good news. So, this makes the story sexy. Everything Nvidia related is sexy, I guess. So the stock is up 8% after hours. So this push to the upside, I think that exceeded the expected move. Let me pull up
Sure.
here a 4 hour chart. Yeah, it's going ballistic. Let me pull up here a weekly chart to see what do we get. I mean, the next potential gap to the upside could be how much? It is trading at $41. So we have $45. This is a previous level of resistance back from March of last year. So that's a
Sure.
potential gap to the upside. I am not chasing this stock here. I would be a buyer of a dip, maybe down to this 5 DMA,
Yeah.
5-day moving average, $37. So we'll see. Maybe there's a turnaround story here on Intel, thanks to the generosity of Jensen, which
Excuse me.
was
Yeah,
forced to
I don't.
announce. He was forced to announce a $5 billion investment in Intel. So
Well, I mean, I think I made that case that this was a political move
correct,
when it happened.
correct, 100%.
It, I, I will say though, I think if you want to take one thing that's positive away from this quarter, and it's why I showed you the new laptop I bought, it's that you are seeing laptops with Intel and Nvidia together, where before it was ARM and AMD
Correct.
that were providing the CPU. So this is a material thing, and the uptick in their PC business is something that can be sustained beyond investments from the government and
And
beyond investment from Jensen. But that doesn't mean it's going to be a competitor in AI. It just means that it finally has a business again,
and they
which,
and they said something about demand exceeding, far exceeding supply, but that wasn't related with
yeah, but
AI data centers and stuff, right?
it wasn't
Oh,
clear.
it wasn't clear. Okay, so we need to wait until the press conference
Let
and
me
see what they say, right? So
Yeah, let me read something real quick. CNBC put out something about the Intel Foundry, which is the fab. It seemed a little kind of counterintuitive when I read it. Maybe you can make sense of it. Investors are laser focused on the future of Intel Foundry, which manufactures chips for other companies, not just Intel's. The division requires 100 billion in capital investment, and it's yet to secure a major customer. Intel said it would start production of its most advanced chips in Arizona during the quarter. And then this is the part that gets confusing. Intel's Foundry reported 4.2 billion in sales during the quarter, down 2% on an annual basis. I read it and it said they didn't have a major customer. And then in the next paragraph,
what?
4.2 billion
Don,
in
let
sales.
me ask you something. So this company trades at 165 times forward earnings. Why would anyone on its right mind buy Intel with this valuation instead of buying Nvidia with a forward P of 30? So I
People
mean,
people don't, I don't know.
I mean,
How much Nvidia do you think people are holding right now?
how many people you mean?
No, like where is the incremental buyer? Like it's 7% of the S&P 500. I'm sure it's in everyone's
Pretty
portfolio. Like
much.
who has yet to buy Nvidia?
I
You know what I
I
mean?
think that there's a lot of money in the sidelines waiting for a pullback in order to
There's a
enter.
lot of people that
Yeah,
are
in
going
order to
that
start
have that.
positions in
There's a lot
Nvidia.
of
So
Listen, I don't disagree. I'm just saying I think when you get towards the end of the year from an institutional perspective, if you're behind your benchmark, you're looking for names that could just play catch up. You want to show your clients that you're invested in these things. And I think that those people probably have at least some NVIDIA. So I'm not saying those are people buying Intel. I'm just saying it's like it's difficult for me to believe that there are still like a significant amount of investors that don't have at least a little NVIDIA.
I could be mistaken. I think that the valuation doesn't support more upside, given the
What, Intel?
yeah, given the
Of course not.
given the earnings report that just came out. So I don't know.
This
I'm
this
skeptical
to
about this.
Oh, I as well.
About this
I think that this to me, quite honestly, Alvaro, is the market making a bet that things are going to improve from here over the next couple of quarters. Josh Brown said this last week, and I thought it was interesting. There's a lot of money to be made when a situation goes from terrible to bad.
Correct. Or
And
less terrible.
when
Yeah.
things are right,
Correct.
right. So it's like maybe this is the market sniffing out a turn, but I've actually seen this happen with Intel time and time again when the stock traded between 40 and 50 and it never ended up happening. So these moves, I remember when they spun out Mobileye. I remember when they were pulling all sorts of financial levers to make the balance sheet and the EPS look better than it actually was. And eventually the market sniffs it out and gets it right. But right now there are probably people taking a bet that it gets better as opposed to getting worse. So
$41.
I don't know.
Hey, let's move on to from an embarrassment, which is Intel, to a company that the US should be very proud of, Netflix.
Right. Before we do that, let me introduce the episode.
There you go.
This is episode 17 of Charts and Checks, where we take a look at some of your favorite stocks from a fundamental financial and technical perspective. This week is Mega Cap Tech Week. For us here at Charts and Checks, we are going to look over Netflix, follow it up with Tesla, and close with Amazon and Google. You can kind of talk about those two together because of recent news with Anthropic, and we'll get to all of that.
Amazon and Google are reporting next week. Oh, by the way, Google is going nuts after hours. Something happened here. Yeah, it's up $2 after hours out of thinner, $3 actually. Something is going on in the case of Google. But yeah, we'll review
is
that
going.
when we get to Google.
We will get there.
Yeah. So,
but yeah, to
do
your
you want
point,
to
Alvaro,
get
Netflix.
things started? Get things started with Netflix.
Yeah, let's do
What
it.
a phenomenal company,
So-
bro! I am in love with this company. I gotta be very honest with you.
So, I mean, listen, the quarter was amazing. The only blemish was a one-time Brazilian tax dispute
correct.
that reduced the EPS. Revenue met, operational margins met, and if not for the tax dispute, Netflix would have exceeded all expectations. If this is a one-time issue, if this one-time issue persuades
It's an
you to sell
ongoing
the
issue,
stock,
so they still need to figure it out with the Brazilian authorities, I think. But
they've said that it's peaked.
there you go.
They said
Correct.
this will be the largest. They said this will be the largest charge off they take,
Mm-hmm.
and anything more will be significantly less than what they reported in this quarter. In my opinion, if this issue that's peaked is dissuading you from looking at it, then we're just not of the same ilk. I know you're probably going to talk about the 200-day
Yeah.
and the because it's at a
Josh
huge
Brown, by the
cluster.
way, spoke about that today during the halftime report. He also, I actually took a day trade on Netflix once Josh Brown, came on the air pumping up the stock and talking about precisely about the 200 DMA, the 200-day moving average. I can pull up a chart here. Do you happen to have a chart available handy, or do you want me to pull it up?
You can pull up 200-day, but before you do that, I actually
Okay.
want to make a case that no one is making at the moment. Oh, here you can. If you want to show the 200-day, you
sure,
go ahead
here it
first.
is.
Mine is technical in nature as well.
Okay, here it is. Take a look. This is
Yeah,
this
penny, my
is a
friend.
rising 200-day moving average. As of now, this 200 DMA is signaling $1,115. So Netflix is right at this level. So yeah. So as of now, taking into account that or saying that this 200 DMA keeps holding, Netflix is such a phenomenal company after having reported probably its best earnings report ever. This stock is 18% of its most recent all-time highs. And mind you, we can argue about the valuation of the company because this is not a cheap stock, right? But
No.
this is an unique company. Why is it? Because there are no competitors to Netflix. No competitors whatsoever. So obviously,
Yeah, I mean-
this company has to be paid a premium because it has zero competitors. So, I mean, if this stock keeps holding this 200-day moving average as support, and despite the fact that from a technical standpoint, no one should be trading Netflix because this is an ugly looking chart, below the 100, the 50-day moving average, the 20, the 5 DMA. I am likely a buyer. I mean, at $1,100, I don't know, $1,120. I am likely a buyer down here. Then, what do you think? What are your thoughts?
I couldn't agree with you more. I think that you can go ahead and take a shot here if you want. If you want to see it support itself at the 200-day, I think it will. And if it happens to breach that level, I don't think it will stay down there for long. So here, let me quickly share with you this. Let's just say that you lose the 200-day that you laid out.
Yeah, tell me your level. I'm curious. Come on.
So here's 1070.
Okay.
This is the 50-week simple moving average. It's only in the last 3 years.
I was looking at that level today because it is coinciding with the previous level of resistance that you're pointing out there.
Yes, the tariff tantrum here.
Pointing out over there.
And the only other time it's even touched it was during the yen explosion growth scare, August of 2024. So to bet against Netflix right now, given the quarter that they just had, you are effectively betting that there is going to be some sort of shock that is beyond anyone's control. And I just don't think that that's a wise idea. If we lose the 200-day, I would expect a lot of support from the bulls to come in at 1070 or 1065 in that area there. I haven't added to it yet. We have CPI tomorrow morning. I have a feeling that could shake the snow globe a little bit. I think that it's going to come in light. I don't think it's going to surprise anybody. With crude oil at near cycle lows the entire month of September, I'll be shocked if we get a headline number that changes consensus at all. But I need to see it. I'd rather buy Netflix going into strength than it going into weakness below these levels. But to your point, Netflix is a fantastic company.
Phenomenal.
It's a free cash flow gusher. If you're going to let
They guided for $9 billion of free cash flow, bro. Unbelievable. I mean, we're talking about an industry in which everyone loses money, bro. So
the only real competitor to Netflix might be YouTube. And it's not even from a content perspective. It's from a share of your television screens perspective.
Correct. 100%.
But, I mean, listen, I don't know about you. I have YouTube TV.
Me too.
I have Netflix.
Me too.
I use them for different things.
Yeah.
I'm not making the decision to keep one or the other. So that's just my opinion. But I honestly think if you can get Netflix at 10, I mean, honestly, if you don't have any, you should maybe just buy some now and then just set a reminder for December to check on it.
I would say, I could be mistaken though, of course, unless something unexpected happens in the economy as a whole, this stock is very likely to be at higher prices when you're out.
Oh, 100%. And I think what's funny about that is that's kind of the point of showing you the 3-year performance of the chart. When it gets to the 50-week simple moving average, unless something bad beyond anyone's control happens, the stock finds support and keeps moving higher. And with the quarter we just had, there's no reason to believe that trend is going to change.
Okay. There's no need to take a look at the multiples and the valuation because, again, this company deserves to be paid a premium because it's the only runner in the race. So there you go.
One more thing, though, Alvaro, because you mentioned it. Like, let's say we do get a recession. And when you do get a recession, money tends to go where either you don't
this
need to
could
worry
be a
about
defensive
growth.
stock. So people are going to be, stuck in their place watching Netflix series. Yeah, 100%. This could also be a defensive stock, of course. Hey, some people are saying that they might, I'm not going to say buy Spotify, but like try to merge both companies or something like that. Some people are speculating about that. And by the way, there's a rabbit that this company could pull out of the hat, and they haven't done it yet. What do you think? What do you think I'm talking about?
Podcasting.
No, I mean,
what they're doing it. They announced
stock split.
But,
stock split. They do it. The stock goes up like 30% right away.
No, that's cocaine for a stock. No,
we're lowering rates with inflation going up. Come on, do a stock split. It is what it is.
I don't know what it is with U.S. stocks and stock splits, but it
works.
Gets people excited.
Can you figure?
It worked.
Done. This company announces a stock split. We are at all-time highs.
Without a doubt.
I mean,
and
in 5 minutes.
I've thought about why that might be the case, and I think part of it is that if you're splitting your stock, like if you're a triple sorry, if you're a $1,000 stock, it's hard for someone to buy one stock, even with fractional shares. It's something psychological. It's the psychology part of finance. When you split it, I think all of a sudden people that didn't want to buy it at 1,000 are willing to buy it at 100 for whatever reason. Even if there's no change, they just do a 10-to-1 split. So, you wake up tomorrow and the shares are at 100. You have people that are like, oh, well, now I can buy a whole share. So why not do it?
Yeah, the company,
And I think,
the company has been
yeah,
asked about the matter, and they say that the average pay of their employees is very high. So
I see.
like the average employee of the company has no issues affording the stock at 1,000 or $1,200. So but come on,
I
announce a
but I
stock
mean, the thing,
split. Let's go to the moon.
I think the other, and here's the thing, I wanted to ask you this because I think you have a better understanding of this than I do. If the stock splits, all of a sudden options are a lot more affordable as well.
Bingo.
So what does
What's
that mean
not
for
to
somebody
like?
like you?
What's not to like?
Right. So like, do like, in other words,
So you're gonna have more gamblers, gambling on the fact that the stock is gonna go up. It's a win-win.
do you think that's a thing though? Like, because like, I guess what I mean by
Yeah,
that
but
is,
you're talking about the nominal value of options, of course. Yeah, sure. Way cheaper.
you think that actually brings more people in? Like, even though, well, I guess you're dividing
1
by 10. It's
million
the same.
percent. 1 million
Awesome.
percent. Come on,
Awesome.
Netflix. Do the stock split.
All right,
Let's
my
move
guy.
on. Come on. What's next?
I like it. You want to talk about Tesla?
100. I mean, not really, but let's talk about Tesla. Come on.
All right. Well, here, let me quickly recap
Okay.
the quarter quickly. This was the first time in the last 2 quarters they managed a year-over-year increase. EPS missed due to capex, but if you're in the stock, you're in the name because they're investing in all of these things. You don't really care about that. In my opinion, if you like the stock before the report, you still like them now, and if you didn't like the stock before the report, you still don't like them now. Let me quickly share a chart, and I'll
I
just
listened
kind
to
of.
the whole thing,
I did.
to the press conference. A bunch of lies. So Elon said that
Yeah.
Optimus was going to eliminate poverty all around the world. They also said that they had to take a $400 million loss because of tariffs. And he said as well that in 5 years they should be selling how many Optimus robots?
Dude,
it was like
I don't waste my
I don't
time.
know. It was like 10 million. No, 1 million or 10. I don't.
cannot
I
be
mean,
10 million.
it is whatever it is. Go ahead.
Maybe 10. Maybe 10.
Okay, I don't remember. But, it was a lie. Whatever it is, so it is what it is.
Yeah, we got a 1-year daily of Tesla. In blue is the 50-day simple moving average, which closed around 395. In orange is the 100, 357. The 200-day is at 335. The stock closed today around like $447. The point I was trying to make here is that it is in this elevated trading range for the last month or so. If it gets below 400, which would imply a violation of the 50-day, you can get bearish. But if you get above 450, you could start seeing people chase this stock to new all-time highs. It's where it struggled to get above before. In my opinion, if you want to trade this name, I think you could start betting on a breakout to new all-time highs. The RSI is at 57. Generally, you start getting
What
into
chart
the
is that?
60s.
What chart is that for the RSI at 57? What time?
RSI 57 right
Yeah.
down
What
here.
time frame are we looking at?
It's the typical 2 weeks. The typical 2 week.
Okay, yeah, but the chart that you are showing us is it a daily? Oh, it's a daily. My bad. I didn't read it. My bad.
Yeah, no, you're
Sorry.
right. You're right.
50
1-year daily.
RSI at
No, you're-
57 on a daily. Okay, that's okay. I didn't read it.
Yeah. But it's the 14-day rolling daily. You can change the period on RSI, but 14 is the
Next
same.
earnings report will be
but-
interesting because obviously there was a lot of front loading ahead of the elimination of the EV tax credits. So
Yep.
yeah, we'll see what happens, on the next quarter
Well,
or so.
exactly. But I think that if you see that chase to performance that everyone is talking about, this stock should make a new all-time high.
Yeah, but
And
this stock doesn't trade based on any, fundamentals. So it is just about the future because Tesla is the future, bro. It is a cold stock. So, people are basically being very optimistic about full self-driving, which isn't ready yet. And I know it because I am a Tesla owner myself. And I don't know.
Well,
I think that we have
here's one
we have
thing.
like 10 robotaxis. And by the way, Elon said during the press conference that they will be starting the production of the Cybercab, which is the robotaxi,
Yeah.
on Q1 of next year. So
So
It's
it'll
gonna
it'll be Q4 of next year. Yeah.
Q4 of 2028, say. I mean,
Or maybe he meant Q1 of 2030.
there you
We'll
go.
we'll
You
find
know,
out when we
with it,
get
you
there.
never
But
know.
just two more things for me, and you can look over the short term because I think that's
Okay.
probably more insightful for the people that are listening here.
Okay.
You don't need to get uber bullish until 450 until you really get some closes above there because that is where resistance is. And just from my perspective, for somebody who reads a lot of research, who talks to a lot of people and institutions, they don't actually particularly care for the robo taxi. They're most excited about automation. And
And
the idea that if we
Optimus
get
Prime.
serious about it, yes, if we get serious about Optimus, they really are in the catbird seat. They'll have a monopoly on the space. But again, like you said, there's a lot of like this is a 2030 kind of thing. It's not a 2028
Yeah.
story. So
If
that just
if Elon delivers what he's promising, it is a 2040, 2050. I don't know. I mean, I am not very optimistic about Elon's lies, but yeah, I mean, it's all about. I mean, the message that you want to get across is that it's all about the future, bro. So it is what it is. So
it
this is
is.
a phenomenal technical chart. It is looking very good. Tesla looks like potentially being about to make a major breakout to the upside above all the moving averages. The 5 DMA is starting to rise. So I think that if the bulls are able to sustain price above $444, we have a first potential gap to the upside, 457. And if that level breaks to the upside, yeah, I mean, I agree with you, bro. So all-time highs seems to be just around the corner, 480.
Yeah, I mean, all
And
time
take a
high
look
is
at
just
this
slightly north
consolidation,
of.
bro. Since take a
Yes,
look at the
it's been
range
about a month.
from
Yep.
from mid-September. Yeah,
Oh, 2 months
yeah,
now.
2 months now.
Yeah.
Yeah, so yeah, the chart looks phenomenal. And I mean, if you're, I mean, as you pointed out, Dan, if you're a Tesla bull, this report didn't change anything because Tesla is the
Yeah,
future,
and if you're
bro.
a bear, it didn't change anything either.
Correct.
Yeah.
Exactly. Exactly. There you go.
Yeah, I think we've done a good job with that. I agree, dude. These stocks drive me crazy, and it's why I'm not personally an investor. I'm thankful that I have other funds I'm invested in and other people that hold this stock for me because I am not.
I own 110 shares at an average price of $95. This is a very old
Oh yeah,
position.
stay long. Stay
This is a
long.
very old position. I haven't added to it in years. Man, I mean those 110 shares are, like sitting
Oh
in
no,
my
first of
portfolio.
all,
And
congratulations.
so, but I mean, I understand that. I mean, this is a cold stock, Dan. Who knows if this thing goes to $1,000 because Tesla is the future, bro. So who knows? So it's a speculative position for me, and it is what it is. So that's it.
No, there's nothing wrong with that. The point I was making is that like even if you can't hold this for yourself personally, this is held in many different funds, whether it be momentum, whether it be
Sure.
technology, the S&P, the Qs. You don't need to hold this thing because for someone like myself, I don't like the idea of buying this stock at 450, waking up to a tweet or a social media post on Truth Social and seeing the stock down 10%. Like
Yeah.
I got to live my
Correct.
life. I got to live my
The
life.
volatility is not for it doesn't suit you. Let's just put it that way. That's okay.
I don't mind volatility. I just don't what I can't handle is when the CEO's Twitter feed causes
No,
volatility.
unbelievable.
That is
Of
what
course,
pisses me
of
off.
course,
That I don't have time for.
100%.
So with that, let's move on to
Let's
Amazon.
move on to
This
Amazon.
one is now an underperformer relative to the rest of the Mag 7, if I understand correctly. Reports next week, to your point. It appears as though that Anthropic and Google Cloud are putting together a deal for cloud services. For what it's worth, as far as we know,
Oh,
Anthropic
by
is
the
still a
way,
major.
something.
What?
Sorry, for
Yep.
interrupting you.
Oh, that's right.
Something that is worth pointing out was the outage that we had this week. Wow, Amazon Web
I'll get there.
Services is massive, bro.
Yes,
Massive.
I'll get there.
So I think that the outage was bullish instead of bearish. It
Yeah,
was
no,
like,
no, no,
wow,
okay,
this
okay.
is such a massive, business for Amazon. Go ahead.
No, you're totally right. Let me get through this really quickly because I think that people think that Anthropic partnering with Google takes away from the partnerships they have with AWS. As far as we know, they're still a massive client with AWS. And I think if you look at, I don't think it's a coincidence that that headline came out right after the outage did, because if you're Anthropic, you need to have access to all of those services. You need to diversify a little bit. It's kind of like when SVB happened and you saw a massive flight of deposits from the regionals into the money centers because you can't, it's like, listen, I trust you, my regional bank, but I couldn't live with myself, or if you're a fiduciary that are dealing with client money, I can't have that risk. I just need to go where I know it's safe. I need to go to the Fortress balance sheet. In Anthropic's case, they're like, look, AWS, we love you, but if you have an outage, we need to keep our service going. So we need to find another suitor. And let me share this with you. It was actually from our Discord. This is a screenshot of everything that was out. So we don't have a lot of clarity on all of AWS's clients, but when you have an outage and this list is made public, you kind of get an idea. So obviously Amazon, Snapchat, Roblox, AWS, Alexa, Robinhood Ring, Fortnite, Max, Prime Video, Venmo, Lyft, Chime, Epic, VR. This goes on a long time.
Impressive. A massive company. Massive company.
All right, hold on. We're almost at the bottom of this list. There you go. There you go. So, in my opinion, this is awesome for Google because Google's cloud business is only $54 billion run rate a year. If this is actually tens of billions, let's just say it's $10 billion deal with Anthropic, that is a 20% increase to Google's cloud business with the sign of a pen. That's huge. But for reference, Amazon's run rate is 125 billion. It's a lot. Amazon is suffering from the law of large numbers. AWS growing 20% is actually more impressive than Google services.
And correct me if I'm wrong. So AWS is larger than Azure?
Yeah, 100. So annual run rate from last year, AWS 125 billion, Google Cloud 54 billion, and Azure, if you care, 75 billion.
Wow. Yes. I mean, it's the largest player in the space. So yeah, I mean.
You know how we talk about NVIDIA, the law of large numbers? Like they can't have another revenue beat of 100% year over year. You know what I mean? AWS growing at 19% is more impressive than Google Cloud growing at 30%.
Because of the scale, of course. 100%. Yeah, yes. 100%. So the company reports, as we said, when is it reporting? It reports on the,
let me pull that up for you.
On the 30th. So in 7 days, they're going to be like Thursday. The upcoming Thursday?
Yes, Thursday after the close, they're going to report with Apple and Coinbase and Reddit.
Correct. So,
big day.
The expected move done is, let me show you, 7.7%. So according to today's close, Amazon could be going either up or down, something like $17. This could be a very volatile report. Can there be like some sort of a front running into the print? It's possible. So the 5 DMA is starting to rise. Today the bulls were able to sustain price above the 20-day moving average in pink into the closing bell, $219. But look, so slightly above the current price of Amazon, we can see in blue the 100-day moving average at $222. The 50 is sitting at $225. So for me, in order to say that Amazon, from a technical standpoint, is innocent until proven guilty, I would need to see Amazon above $225. But mind you, bro, take a look at how, and speaking of the 200-day moving average, which we were talking about in the case of Netflix, take a look at the red line. This is a 200 DMA. I mean, it's a magnet for buyers, bro. Pretty much every single time that Amazon pays a visit down to the 200 DMA, buyers emerge and buy the dip. So I would be a buyer before the print, let me tell you, at this 200 DMA, $214. And I mean, for a bullish push to the upside to occur into the upcoming earnings report, the bulls need to recapture $225. So the short looks very choppy and doesn't say much. And we have an expected move of $17 next week coming up. So. And the stock, by the way, is how of the highs. Let me see. It is trading 9% off its most recent all-time highs. Yeah. So maybe the bar is not that high. And we've reviewed Amazon before then, and we know that from a historical standpoint, this stock is trading at very low multiples. So relative to relative to its history. So this is going to be a very interesting report. Yeah.
I'm going to give Stephanie Link some credit. She cited the statistic maybe on Monday. Amazon right now is trading at 13 times EBITDA. I think she said the average, long run average was 18 times. So we're 5 turns below the median EBITDA. So this stock is cheap. And I know we just talked about Netflix and you referenced it too. It's like they're the same company. This is a 2-year weekly. 50-day weekly moving average is $214. The only time it's gone below there in the last 2 years for Amazon was the yen explosion in
So that
August
50-week moving
and the
average is
tariff
coinciding
tantrum.
with the 200 DMA. Take a look at what an important level then.
Yep. So, in other words, again, if you're betting against Amazon, you're really betting that there's going to be another exogenous shock, or you're betting that for whatever reason, AWS, instead of growing at 18 to 20, is going to grow at, like, I don't know, 15. That would be a material change, but I wouldn't place money on that. I'm with you. I've been putting a little bit of money to work in this name over the past couple of weeks. I did it when it successfully regained the 200, or sorry, the 150-day simple moving average. It was right after the outage, because, like, to your point, people saw the outage, and instead of selling it, they realized just how
That was
awesome
my
the
case.
AWS business
That was my
is.
case. Like, wow, this
No,
segment of the
dude, you
business of
crushed it.
Amazon is massive.
You crushed it.
I didn't
Absolutely.
realize that, to be honest with you.
You crushed
So it's
it.
going to be a
You
very
crushed it.
interesting report coming up. And if we happen to see for any reason, and I'm not saying that that is going to be the case, if we happen to see for any reason, in the upcoming days and before the earnings report comes out, another visit down to that 200 DMA, I am a likely a buyer. 214,
Yeah.
$215. Yeah. So who is coming? Who is coming up next?
We could just talk about Google briefly.
There you go.
Just to go ahead and reiterate what we talked about before, if we are going to see a tens of billions, let's just call it $10 billion deal between Google Cloud Services, which has a $54 billion run rate, it's going to hit Google Cloud and Anthropic, then you're going to see a 20% increase
Oh, but there were
in Google
rumors
Cloud
that
Services.
Google could be about to buy Anthropic.
Not buy that, it's a $10 billion deal to do cloud computing services.
Oh my God!
Right
So
now, their only provider, as far as I know, is
AWS,
AWS.
and we just had an outage. So okay, outage. Okay,
which
okay.
which was why you would try to look for somebody else. So just to bring everyone up to speed on the Google story, got absolutely thrashed in the tariff tantrum.
What a buy!
It was
What a
one of
buying
the worst
opportunity!
performers.
What a buying
A hundred
opportunity, bro!
percent,
Down there, I was
100%.
able to get 50 shares at 100 and. I mean, I can actually tell you my average cost on Google.
Yeah, go
I
for
have
it
my
if you're comfortable.
yeah,
I by no
100%.
means
No, no,
feel
100%.
obligated.
So I own 50 shares at an average price of $153, bro. So this is a very, very nice position for me. But mind
Hell
you,
yeah, dude.
I'm a bit. So I mean, I can take a look. I mean, go ahead, finish your
Oh yeah,
explanation.
sorry.
Sir.
Just this big gap here was actually the antitrust ruling where it came out that Chrome wouldn't need to be separated. And ever since then, it has just been on a tear. Once that overhead was removed, it appears that was the bear case. Because once that was gone, you got to a new all-time high. You haven't revisited since then, and now you're consolidating in a new trading range between 255 and let's just call it 230. And honestly, I think that you're going to see this continue to move into new all-time high territory, especially if you get confirmation that the Anthropic Google Services deal is going to happen. That's a huge deal. It's a huge signing for a run
Yeah,
rate of 54
that's
billion.
a very positive catalyst that you would say that is not yet priced in to the stock.
You could say that some of it's priced in, but they said tens of billions. So if they say it's a $10 billion deal, maybe it doesn't do anything. But let's just say the tens of billions is more like 20 or 30. Then I think you get a hell of a lot because again, the business is $54 billion. If you do if you add 20 billion to that, that's like a 36 to 40% increase to your annual run rate with one customer. That's crazy. That's crazy.
Yeah.
And I don't think that's priced in at
Yeah,
255.
let me show you here quickly earnings whispers because we have almost an 8% expected move. So let me see if I can share this correctly. Can you see that?
Yep, you
There
got
you
it.
go. So 66% of the earnings whisper subs believe that Google will beat at least on EPS and revenue, and 75% of these people believe that the stock is going up once the report comes out, and we have an expected move of 7.6%, which would be representing. Let me see if I can. Hold on. So let me go over Thinkorswim quickly.
You got it.
Yeah, 7.6%. So let me pull it up here quickly. I mean, the stock is pretty much trading at all-time highs, so 7.6%. We're looking at this is going to be another very volatile report. We're looking at, for the most part, $20. Don't you think that the bar is a bit too high for Alphabet, taking into account that the stock has gone up since early April? How much? It's gone up 86%. What do I say that, Dan? Because since I own 50 shares at a very good average cost, I haven't wanted to add more to the position. But now that the stock is about to report, and since, it's been going on a tear, I am thinking about adding 50 more shares and selling calls and writing calls into their report. Because, the short looks very good, but we have an expected move of, how much did I say? $30.
8%?
Yeah, 8%. So I said, so it's, let me see, it is this is a $20 move to either the upside or the downside. So if it happens to be to the downside, I can protect my position from downside risk by writing calls. I may do it. So you don't think that the bar might be a bit too high for Alphabet next week?
Listen, the bar is extremely high.
There you go.
It's just if they come out and say...
So the report has to be like pristine. Otherwise,
right.
The risk could be to the downside. Mm-hmm.
But if you believe that this Anthropic deal is going to happen and that it's going to be 10 to 20 billion, that dip gets bought if there's any letdown. So in other words, if you get a great quarter and you get, we're talking with Anthropic, I think you just stomach it and buy it,
Yeah.
So I don't know. You can wait. I don't have any edge on it. I would never, it's one of those things. You don't want to short a stock that's at an all-time high. So to sell a covered call on a stock that's at an all-time high is not shorting it, but you are limiting your further upside. So unless you have reason to believe that the fundamental is about to shift, I think
I would be selling out of the money, of course, say to 80 to 90. I mean, if I get called away, so be it, bro. So
right, it's the best trade of all.
100%. Let me show you this. And speaking of a potential high bar. So in the case
you let me rip on Amazon. Go ahead.
No, this is Alphabet. So take a look. This is the price to sales ratio. So as of now, it is at 8. So this implies that anyone that is buying Google at these levels is paying $8 per every dollar of revenue that this company is making. And as you guys can see, this short or this price to sales ratio short comes from
it's a chart.
Comes from 2016. This is the highest price to sales ratio that we've seen in the case of Google in many, many, many years. I think the bar is high. And for Google to go up after the earnings report comes out, wow, this has to be like a super, extremely, way better than expected report. So I'm a bit skeptical. And since, as of now, I am a happy shareholder of Google, I am likely adding 50 shares to my position and selling calls. I'm going to be writing calls into the print more likely.
Do it.
Yeah.
Do it.
In the short term, let me go over. Yeah, go ahead, Dan.
I just want to give Google credit. There was a period there where we thought they were doing nothing right and there was no way for them to win. All of a sudden, VO3 comes out, or VO3, however they want to say it. A phenomenal AI video application. They nail a deal with Anthropic. They get cloud services right, and they haven't lost the search monopoly.
Yeah, which was the bear case, correct? Because of ChatGPT and this and that, and I mean that isn't the case.
Fantastic stuff.
That isn't the case, correct? From a strict technical standpoint, keep an eye on the 5 DMA, $254. This technical short looks fantastic. It is under the total control of buyers, above all the moving averages. The 5 DMA is starting to rise once again. So as long as the bulls can sustain price above $253, this stock could be taking out all-time highs. All-time highs, by the way, is $260, above $260. You guys can set the price you want. 265, 270, who knows? The short looks fantastic, and this is going to be another very interesting earnings report that is coming out next week. Hey, do we need to go over any other stock, or that's it?
Did you find out why Google was rallying?
No, I didn't see. Let me see.
Oh, it's come back down.
It's come back down. A bit. And Amazon did go down a bit. So no, nothing crazy, but it went up all of a sudden, almost $4. Nothing happened, but I mean, it is giving up those gains. So Let's just not make a federal case out of it. Hey, Don, please tell the guys about your YouTube channel. Please.
Yes, we just started a new YouTube channel, Gorilla W Glasses. You can find that on YouTube. It'll be in the link below. You'll get my 925 newsletter. You'll also, well, you'll get highlights.
How many
from
videos
this,
are you making per week?
We're trying to do 2 to 3 a week, and then just some shorts here and there. I have been a little bit overwhelmed recently, so we're going to find a way to try to find a way to record more, but in different formats. So the stuff you see now might not be the same format moving forward, but you're going to get 2 to 3 videos a week without a doubt.
There you go. So go ahead, guys, and subscribe to my friend Don Fallaina's YouTube channel. And this was episode 17th. And
episode 17. But before you go, I want to give everyone one thing because I think it was incredible. Did you see the action in IBM today?
Yeah, 100%.
It just touched the 50-day and then went all the way back up.
$260. And by the way, at $260, we had the expected move. So it exhausted the expected move to the downside due to the penny. So the options market is very accurate at predicting expected moves. And the report was very good. The report was
it was just crazy. Like, you would expect support to come in at 265. It's the 50-day, and it's the level that the stock got rejected at back in July after it had a bad quarter. And the buyers just came in. The buyers just came in. I think this goes higher. And the same thing can be said of GE Vernova.
I didn't see that report. I didn't see it.
It was a great report. Hold on. That was the 50-day. You've got to look at the 100-day here. Opened a little below, retested the pre-earnings level from the prior quarter, went right back above the 100-day. I mean, this stock, you might want to wait until you get some closes over 600, but IBM, the market thought about it again. And I'm really optimistic IBM and GED.
Yeah, and I'm still seeing some people being a bit, skeptical about the new story behind IBM, like quantum computing and AI and stuff. But I'm starting to feel very bullish about IBM. I got to be very honest with you. And the report was phenomenal. The report was phenomenal.
The quantum thing is I don't want to. It's cute. The real business at IBM is their AI book of business that just surpassed, I think, 9.7 billion.
Bookings came out like super better than expected. Correct.
Yep. And people are upset that software only met expectations. I'm sorry. If this were any other company that didn't have the baggage that IBM had, this stock never would have been down in the pre-market. But hey, it gave you an opportunity, and in the day, and it gave you an opportunity.
Yeah.
But I just wanted to highlight that because I have talked about IBM quite a bit in the past.
No, this was a bonus stock. So let me pull up here quickly the 4-hour chart. If the bulls can sustain price above the 20-day moving average, they would be doing it, or they would be able to sustain price above all the moving averages. The 5 DMA is starting to rise. Take a look in white, the 20 in pink. The 20-day moving average and the 5 DMA are coinciding as of now with previous levels of resistance at around $185. So in regular market conditions, because of course tomorrow we have the cooks from the Bureau of Labor Statistics,
we'll see what happens there.
Releasing the core CPI or whatever that is. So if that happens to be a nothing burger, and if tomorrow or in the upcoming days we happen to have normal trading sessions, the bulls of IBM can sustain price above 284, 285, and this situation could be attracting more buyers into this technical chart. So thanks for bringing it up, Don. Awesome. This is a great way to wrap it up.
This was good.
Awesome.
This was good.
So see you guys next week.
Again, see you all next week. Thank you so much, Alvaro.
Okay.
Talk to you again soon.
Bye.
Bye-bye.